Welcome to This Explainer. We constantly hear about these massive, high-level corporate strategies, billion-dollar mergers, and visionary leadership. But today, we're stripping all of that away to look at the absolute foundational truth of any business. We are talking about bookkeeping. This is the true competence foundation of accounting.
Imagine trying to run a massive, fast-moving enterprise without a reliable way to track your cash. It'd be absolute chaos, right? It's literally like flying a commercial jet into a hurricane without an instrument panel. So how do businesses survive without flying blind? Well, they rely on meticulous, granular data. When you look at the classic tools of the trade, the calculators, the ledgers, the data charts, they represent way more than just math. They represent clarity. As our source points out, bookkeeping is the competency foundation of accounting. Before you even think about complex tax strategizing, financial modeling, or forecasting, this bedrock has to be completely flawless. It's the raw material that every single strategic decision is built upon. So, what exactly is bookkeeping on a day-to-day basis? What actually separates a rigorous financial system from just jotting things down on a napkin? The answer really lies in relentless consistency. It's about having a protocol that guarantees the financial reality on paper perfectly matches the operational reality on the ground. By definition, it's documenting all financial transactions that happened to the company on a daily basis. The folks doing this are essentially financial detectives, right in the trenches, managing the raw data so nothing slips through the cracks. It's meticulous, and it forms an unbroken chain of custody for a company's capital. Honestly, without it, you don't really have a business. You just have a highly disorganized hobby. And it all ultimately boils down to this critical balancing act, tracking cash inflow versus cash outflow. We're talking sales and revenues coming in versus salaries and purchasing going out. Maintaining this equilibrium isn't just about paying the bills. It's about knowing your true operational leverage on any given Tuesday. It's the real-time pulse of the organization. Let's look at a very brief history of bookkeeping. This isn't just some modern corporate invention. The absolute necessity of tracking trade stretches all the way back to 2600 BC, with Babylonian and Mesopotamian societies using clay tablets just to manage their economies. Fast forward to 1494 AD, and Luca Pacioli describes the modern double-entry system. That wasn't just a ledger update, by the way. It was a total game changer, a revolutionary system of checks and balances that essentially built the modern global economy. Seeing those ancient clay tablets right next to Pacioli's system really proves a timeless point. Whether you're an ancient Babylonian trader organizing grain or a modern CEO managing a global supply chain, the core problem of tracking trade is exactly the same. The technology evolves rapidly, sure, but the human imperative for absolute financial truth never changes. Moving right along, let's explore exactly why bookkeeping matters today. Our source text is actually incredibly blunt about this. It states, without bookkeepers, companies would have no clue about their current financial position and any transactions that occur within the company. Think about the gravity of that for a second. Without this continuous data, a company is essentially wearing a blindfold. You completely lose the ability to forecast or pivot. You wouldn't even know if your most aggressive strategies were actually profitable. To prevent that blindfolded nightmare, this meticulously tracked data serves two highly distinct audiences. First, you've got your internal users, the managers and executives relying on precise data for operating, investing, and financing decisions. Second, you have the external users. This is the outside world, seeking reliable information to evaluate the true stability of the business before they engage. For those external users, the stakes are massive. Investors demand this data to make investment decisions. Financial institutions absolutely require it for lending. The government mandates it for accurate taxation. All of those massive, macro-level decisions entirely depend upon the micro-level accuracy of the daily books. If they can't trust that base layer of information, capital just stops flowing. It's that simple. So, trying to reach the pinnacle of business development, scaling, innovating, capturing market share is physically impossible without a rock-solid, data-driven foundation. The grandest corporate ambitions will inevitably collapse if the financial data holding them up is crumbling. You simply cannot build a skyscraper on a swamp. It requires deep, structural engineering. Which brings us to a final, slightly provocative question. If you had no clue about your financial position, how long would you survive? Do you know exactly where your daily inflows and outflows are going right now? It's a powerful corporate lesson, but it applies perfectly to us on a personal level too. Are you operating blindfolded? Thank you so much for joining me for this explainer.